Welcome to Sykes, the Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Your checks, yes, you can call me, because we the best, Sykes and Company. We the best.
All right, everybody, welcome to another episode of the Sykes Bottom Line Pharmacy Podcast. And today is the middle of July, and it's hotter than Hades out there. Bonnie's got her bathing suit on just about over there.
Hot.
It's brutal.
But you just got back from Cardinal.
I did.
How'd that go?
It was good. We had about 240 in the class.
Oh, man.
Talked about DIR fees.
That is the topic.
That is the topic. And
What's the top question on DIR fees people have right now? Was there one, a reoccurring one?
No, there's not. My main thing for everybody in the class was your fundamental accounting. So it's all going to start there. I mean, if you don't know, if you're trying to prepare for DIR fees, you got to have your fundamentals in place, and then you can use your accounting to help you plan and prepare. So I told folks, step one, get your fundamentals in order. And what that looks like is you take your balance sheet at the end of last year, and you literally go line by line that balance sheet, and you be able to support each line item on that balance sheet with a work paper or something, and be confident in those numbers, especially your equity section, because, if that's not tied down, that typically means you have two sets of books compared to your tax return and what your CPA is doing. So the fundamentals is just a huge piece of that. And a lot of times we see inventory not being adjusted every year. It's the same number, no receivables or payables, has a bunch of old stuff in there. There's duplicate checks in the bank account. So the fundamentals are all out of whack. And if that's happening, you can't really rely on your accounting to help you plan and prepare for 24 DIR fee unknown. So those
Definitely
fundamentals,
the first step.
You got to have it.
Yeah.
Got to have it.
Yeah, I mean,
So-
I know we talk about that, but it really goes back to the basics of that. And definitely every line on the balance sheet is important, but that, inventory and the receivables, they drive that P&L, your gross profit. And if those are off and not correct, and we have to go as far even with our clients right now to explain to, even if you have a third-party reconciliation service in place, there's still a lot that you have to do with that. So you've got to go a step beyond that and look at your reports and make sure that they make sense and they're correct and that you're checking off those claims. Because if you're using the number on your report, but your report's bad and you've got a lot in that, over a 90-day column, then your receivables are off and then your financials are off. So
There's a lot of data.
There's a lot.
There's a lot of data in that third-party reconciliation system. So it's not just for getting your receivables and your DIR fees, because that's where you're getting that information from. But there's a whole host of information in there. I mean, who's paying you, when they're paying you, what's not being paid.
Yeah, a lot of times there's different fees and things like that.
Yeah.
DIR fees, and then there's additional fees on top of DIR fees that you kind of got to take a deep dive in if you want to know what's going on at the granular level.
But I'd say the environment was just, kind of tense, people not sure what's going to happen. Nobody knows. So you just got to, plan and prepare best you can. And one thing I did mention is, which kind of gets not talked about, is owner draws and distributions. So monies the owners are taking out of the pharmacy. You're going to have to be mindful of that going into the end of the year. Taxes is obviously a big part of that, because that does not show on your P&L, profit and loss. Those are balance sheet items. So be mindful of that. In addition to the debt, you're paying, because principal on debt is also not an expense on the P&L. So that whole, it all goes into the cash flow cycle in your pharmacy and how cash moves in your pharmacy. And again, they got to have the fundamentals to do it.
And that's one thing that I feel like is everybody knows is important, but people are afraid to talk about a little bit. is cash. Just how much cash is enough and how much is too little. Because if you think about it, the inventory and the receivables, those are moving pieces that a lot of people have no handle on. But you can just pull up your phone quickly and you know exactly how much cash you have. Now, you know how much you have, but the question is, do you have enough? Do you have too much?
Never enough.
Or do you have too little? But you think about it,
yeah, everybody's appetite's different for what they can
for what they can have.
Hey, yeah. But you know, I know I have some clients that are concerned about the timing. So you've got all this going on in the first quarter. You get taxes that'll be due in first quarter, personal estimates for the next year. But also, you know, we've had a lot of clients, you know, under the cash basis that have been doing a lot of prepayments to get expenses to bring down taxes for that current year. And their concern is, am I going to be able to afford to do that and have the cash to do that with everything coming first quarter?
Yeah, that's a good question.
To save it, but then I'm going to have more tax due. So it's something.
Can I tee y'all up a question real quick? I'm gonna tee this one up. Y'all can hit it out the park. How does current debt, like your amount of current debt, impact the amount of cash a pharmacy should be thinking they need to have coming into this DIR fee first quarter situation? How do you think that would impact the cash flow that they need?
Well, I would say, you know, you need to be looking at that current ratio. That's that key performance indicator on your balance sheet for liquidity and cash flow. And that's going to take into consideration that current debt. So, you know, getting that current ratio, you know, historically it's been around 2.5 to 1 for a pharmacy.
Yeah.
But you know, you're going to want to get that up to 3, maybe even higher than that going into the end of the year. Is probably a wise thing to do. But also, you know, having some kind of idea of what, we don't know what's going to happen, but having some number or estimate you can work off of, I think is important too. So we've got some clients who will take, you know, the trimester DR fees, January through May of 2023, and they're going to multiply those by 2.5, add them up, multiply them by 2.5, and say, you know, this is kind of the impact I'm going to see next March, April, when it's expected everything's going to hit. So that give you a good idea, I reckon, of a number.
Yeah.
To shoot for. So we're seeing some pharmacies do that. And also the third-party reconciliation systems have some estimators in there as well.
And it just makes it hard to estimate when you're talking about debt. You know, so many of our clients have SBA loans with adjustable rates, which are great when rates are going down. But with them going up, you know, payments are up. But that's just another thing.
Yeah, so like a client that has, like, for example, they're paying monthly on their wholesaler bill, so their accounts payable is very large. And then they may be a newer pharmacy that has a lot of outstanding debt from the purchase. So that in the next year, the current portion of those purchases is going to be pretty heavy too. Yeah. Which doesn't factor in on the P&L just because principal payments. They might need to have a little bit more of a cushion than a mom and pop who's, you know, third generation pharmacy owner who doesn't owe anybody anything, and there's no current debt on the books, you know.
You mentioned prepay earlier, and inventory does not count for prepay. Right. Inventory is inventory. So
operating expenses. Yeah.
Yep.
You know, we have people that go ahead and pay rent for the year that are on cash basis, you know, in December. Go ahead and get that deduction, those sorts of things.
But it is a good question, because are you going to prepay the whole year? Or are you going to prepay the first 3-4 months while you're trying to deal with the...
There's a lot of moving pieces.
So it should be interesting.
Makes it fun for us for tax planning too.
Gotta love tax planning. Check this out. I got on my coffee machine, there's this bold button, and I've never hit it before. So I made my normal coffee, and then I hit the bold button. I'm telling you, caffeine doesn't really get me, but this thing, like,
It got you. You're awake now? Got some nitrous oxide? It looks like you just hit the nitro button.
it's almost like one of those,
Fast and the Furious.
caffeine jittery. I don't really like it, but
What did it do? What did it add?
I don't know.
Interesting.
Kendell's the
He's
I don't know what
wrestling man over there.
Yeah, I don't know. I don't know about this. I haven't even gotten my coffee, so I didn't want to be screaming into the mic. So I'm getting my coffee after
Oh man,
podcast session.
gotta have coffee.
And then, we had some nice photos. You guys were looking good on the trade show floor. The highlight was the one of Allen on, and he had this gesture like, we posted it, and hopefully, did Allen get upset? Did he see that it was posted? I didn't know how he would feel.
He didn't make any comments about it.
He didn't make any
I
comments.
don't think he was too flattered by it.
I've seen that look many times.
He's like, I don't know, what are you doing? But it was in the
Especially
section,
when you're
though.
traveling, you'll see that all the time when you're traveling with them.
Yeah. Do you remember what that was in context of, or is it like?
I have no idea.
We'll have to make up our own captions for it.
I have no idea.
Yeah, if you haven't seen it.
Have everybody submit.
It's a meme.
Yeah,
It's a
no caption.
total meme.
And pick the best one.
Yeah, and check out that. Yeah, definitely check out our social media. I think that was on our Facebook page. But I got the biggest compliment, and my heart hurt the hardest at the same time. So we had a client who called in and was like, "What's going on with the DIR fees? You got any advice?" So I said, yeah, and I sent them the podcast we've done on DIR fees. Mm-hmm. And I was like, let me know. We can talk about it in detail after you get a chance to watch it. So she replies back, great information, exclamation, exclamation, exclamation. Looking forward to listening to future podcasts. So at that point, I'm on cloud nine. I'm like, okay, we're doing something. We're touching some hearts. We're moving people.
But they didn't
And then the
know
next
that.
sentence, I didn't know y'all did this.
Oh.
My heart hurt at that moment.
We've sent some emails out about it.
I think so. We're going to send some more soon, though. So,
We
but
should.
no,
We
it
have
tells you
to
that
do it
people are
all.
listening, and yeah, it's answering questions too. So I got to give a big shout out to you guys and all our guests who've come and kind of shared some good knowledge, because it's impactful. People are listening. Did you hear any people on the trade show floor mention?
Yeah, we got a few people that mentioned, and I always ask, subscribe if you don't know about our podcast. So we got a few hits out there. Come up to the booth, hey, I've been listening to y'all's stuff. So
we need anybody listening to this one. We want to make sure it stays relevant. So definitely, whatever platform you're using, put a comment in there. Let us know exactly what you want to hear and talk about next, and we'll do it. We'll put it on the list for sure.
yes,
Yeah.
we will. We ain't scared of nothing.
Because right now the topics are DIR fees and ERTC.
Is that your cue to switch into your favorite topic?
Well, why not? Have you had any updates, Scotty?
Well, as a matter of fact, I have.
Reporting live from Edenton.
The
We
IRS.
recorded, so this could have changed by the
Well, when we did do our talk, ERTC was a few questions. We did get a few questions on that. My go-to answer is, I'm not going to tell you don't qualify,
Yeah.
but, and even though Dad told everybody they don't, I told
He
him,
said, I'm not going to tell you.
and I told him that in the show while we were talking. It was funny. Anyway,
maybe that's what he was doing. Is like,
Yeah, it's like, how in the world do you think you qualify?
it's not that you don't qualify. It's like, if you do qualify, what you have to do to show you
To prove it,
qualify
yeah.
is extensive. It's not the check the box and then just attach a government order and this and that. You have to show that nominal impact and with quantifiable numbers and things like that, which I have yet to see any third party produce. So that's why I say it's very hard to qualify.
And I will
or
say,
to make yourself eligible there.
you have to be even careful with that too, because I've had a client recently to send me the paperwork before they signed it. They're like, they used a third party, and they're like, they gave us, they sent it to me, the attachment. This is the paperwork they gave me that's proving that we qualify. And they were like, yay, we qualify. And we look at it, and it is not. So even if somebody tells you this is attachment proves that you qualify, I mean,
Yeah.
what is it?
And I think in some industries, maybe that's one thing I always emphasize, maybe it was as easy as some of these third parties are exclaiming it to be. In some industries, meaning if you owned a restaurant and your restaurant was closed for several months.
You were closing.
Yeah, definitely. Let's slap that government order on there and write out the details and do it. It's going to be quantifiable too, because you had no income for several months. But specifically for the pharmacy industry, I mean, the restaurant didn't get revenue. The pharmacies had their best years, and it's just that this particular industry didn't have that impact that other industries had.
So that's why it's harder to qualify yourself
as a pharmacy.
Yeah. And so the supply chain disruption qualifier really took a hit this past week with the IRS issuing this memorandum here, 8-page memorandum from their legal counsel there. And they pretty much say the supply chain was never in the statute, and that it's going to be very rare to claim a supply chain disruption. So if you're leaning on the supply chain disruption, you might want to read this memorandum that just came out, AM 2023-005, release date 7/21. And that'll give you some insight on what to expect with the supply chain disruption and what's needed there, because you really have, if you're going to go with that route, you gotta go and argue why the supplier had a disruption. So you have to pull the orders they're under, pull the issues they face. So you have to do pretty much an ERT study on the supplier and then roll it into how it impacted you. So it's crazy.
I've never seen this many updates and changes from the IRS and memos on one topic in such a short span. It basically says, hey, we know a lot of people are not doing this right, and this has gotten our eyes. Obviously got the attention of the IRS. Everything, It's every few weeks they're releasing something new.
So you just want to be careful, do your due diligence. But if you did have the drop in gross receipts and you meet that test, then I would certainly be looking at the RTC, because that is a clear-cut, black and white test.
But that's about 1% of what we've seen clients. Right.
Yeah.
With a drop.
So that ERTC continues to unfold. I imagine that might just have to be like a permanent topic, because
it's going to be forever for me.
There's going to be the court cases coming, it'd be nice and juicy getting into those. So
be amending tax returns.
I don't know, man.
4 years from now.
You can't amend a return that far.
That's true.
So just be careful. Just be careful out there. Know what you're doing. Know what you're saying.
Wild West.
Mm-hmm. Oh, what else we got?
I mean, that's basically the only two topics going on.
Those are the big ones right now. And then obviously we're about to start ramping up tax planning and things like that. So
we do
ramping that up.
We have some a little bit. During the summer lull here of our podcast, in between all the travel, we are looking at booking some new exciting guests.
Oh, yeah.
For the fall.
We've got some really good ones.
Hopefully get NCPA, maybe Doug on here, or maybe link up with Pioneer, hopefully on one of these. 340B. Let's see, what else? All kinds of stuff. So we're working on that in the background. Maybe even have the big man himself, the Big O.
Wait, he's got that wallet.
And do another travel blooper.
Yeah, we definitely got to get Big O on. Big O.
I'm trying to think of any travel. I don't really have any.
Y'all were packed. Y'all were so busy. Didn't have time to make any film.
I do have one funny story. I guess it's kind of funny. So we went out to eat at Cardinal, somewhere downtown Boston. And I was like, it's a mile away. I'm going to walk. I'm not going to sit in the traffic for 20 minutes. And so I walked, but Dad wanted me to go ahead and reserve the Uber for like $5.15. So I had the phone. I reserved the Uber. And I was like, well, I'm going to cancel it because I'm going to walk, blah, blah. He's like, no, don't do that.
We're not going to get...
All right. Fine.
There's no more.
I didn't argue with him. I was like, fine. And so I'm sitting there in front of the restaurant just waiting, just relaxing for a minute. And I get the message from the Uber guy.
He's following you.
I'm here. And it's 5:00, not 5:15.
Oh, wow.
Dad, Megan, they're all up in their hotel rooms. And
why would you
so I texted
an Uber and you're not there to...
I texted the whole group and was like, hey, the Uber's there at 5:00. And then I didn't hear anything. And then then they get to the restaurant. They make it to the restaurant. And Megan, later, that next day, she's like, oh my gosh, you have no idea. He was knocking on our doors. He was running down the elevator, running to get into the cab. The cab's he's gonna leave. So he was freaking out.
Those are good times. I
was sorry.
I was like, I know all about that.
Yeah,
Meanwhile, I'm just sitting on my bench, just relaxing. No stress.
Yeah, and you walked.
And I walked.
So what you learn from this is you get your own Uber with your own phone. When you're ready, and the group is ready. Listen, one day we'll need a whole separate episode to go through my favorite island travel blooper. When he had to call up security to check on me in my room on a Saturday morning.
Ooh. Yeah, we're going to have to do that one.
I had 10 people at my door.
Oh, he almost did that on this trip. Caroline. We had to tell him, hey,
That was my favorite. Yeah.
He texted Caroline, we're sitting at breakfast. Where is she? She's not here.
I would just say I had 3 hours before I had to be somewhere, and it was a Saturday morning. And I had my phone on silent. And apparently after he texted me a few times, he expected the worst. So he sent up...
That was it.
A well check.
I missed a Teams meeting one time. I had a wellness check.
Get somebody from your town to go check on you. Oh my goodness. He cares. It's important.
Yeah, we love that guy. Love him.
He wouldn't check on me. He'd be like, whatever. I don't show up at the trade show. He'd be like, whatever.
I think that might have happened. You've been late to the trade show before, and he's like, oh. Years ago. He didn't care. He'll be here.
I'm about to cut my phone off silent right now. Just in case.
You better answer.
I would keep my ringer on.
God. We also could talk about another time, my favorite Alan's phone got run over at a gas station right before the last trade show. That was exciting. We were leaving on Monday morning, and this happened on a Sunday. He was in a complete panic. So he was not going to have time to get his phone before he left.
But he got it.
Unless he sat in a Verizon store, which, nobody does that anymore. So he spent his Sunday in a Verizon store. But the best part was he kept complaining about the idiot who ran over his phone. And I was like, how is it somebody else's fault if somebody runs over your phone? And finally, while we were at the trade show and he had his new phone and everything was fine, he explained to us that he thinks he could have been the one that ran over it. So. What is happening?
He pretty much told me he did it.
His Tesla probably recorded it.
It's a whole other thing of why were you at the gas station if you have a Tesla? And why? How did you run over your own phone? But those are the things we're dealing with here. Real life topics.
That's what keeps us going.
Well, you leave for Amerisource soon. Kendell and I will not be there.
Should be
And
good.
then NCPA coming up in October, along with another ownership workshop opportunity for anyone who's looking to do that ahead of the show.
Definitely.
So they're definitely taking registration for that. I saw that the other day, promoting that.
And let's go ahead and plug, because when we go to the NCPA, we go ham on podcast, video, marketing,
Stop by
interviews.
the booth, please.
Because Kendell's going to be.
Kendall's going to be there. We're all going to be there.
So if you want to get a guest appearance or something like that, that's where you want to be. Come on.
We need to go ahead so that we are accountable. And I'm going to go ahead and say it right here live today. So we can't go back.
I'm scared. I'm
Unless we
scared.
edit this out.
I'm scared.
We're going live. We're going to do a live podcast at NCPA.
Let's do it.
On the
We need to
trade
do
show
it.
floor. We're doing it.
Do it.
Yeah, we need to do it. iPhone 14, a little microphone. We can make it happen.
That
We
was a
do
good
have some old stuff from a year ago that we could
Yeah.
re-release.
Listen, you give me the green light, we'll have that. We'll have that ready in no time. So
I mean, I don't hate it.
Oh, so I guess we got some tax returns and financial statements to look over.
yeah,
So better get back at it.
I need to read that IRS notice.
No, you really don't. It just says, if you're going for supply chain disruption, forget about it.
Forget about it.
so the bottom line, we still got. That's the bottom line right there.
The bottom line. Yep, that's the bottom line. Yep. And come see it at one of the trade shows.
Absolutely.
All
And if
right.
you're interested in an assessment, talking about, going back to fundamental accounting, you want us to look at what you got, we've got a service for that too on our website.
One-time service.
One-time service.
One shot.
Kind of a checkup to see how things are going.
Yep. All right, everybody. We'll appreciate you listening in, and we will see you on another episode of
Your
The Bottom Line.
Bottom Line.
See podcast.
Your quick books.
And that's the bottom line.
And that's the bottom.
Your checks.
Bye.
Yes, you can call me. Cause we the best. Sykes and Company. We the best. Sykes and Company.